Welcome to the Stock Market Daily News Podcast for Friday, January 18th, 2026. Let's dive into yesterday's markets and unpack what's moving Wall Street. U.S. equities closed mixed on Thursday. The S&P 500 ticked up nearly 0.5%, settling just above 4,820. The Dow Jones slipped around 0.33%, closing under 37,900, while the Nasdaq gained about 0.6%, fueled by tech volatility. The headline today: Big Short investor Michael Burry is sounding the alarm on the AI bubble, drawing a sharp parallel to dot-com era exuberance. We'll break down what this could mean for Nvidia, Palantir, and broader market positioning. First up, Michael Burry, the money manager who famously predicted the housing crash, is taking direct aim at AI giants. He warns that hyperscalers like Microsoft and Alphabet are sinking billions into AI infrastructure, chips, data centers, and software, with no clear path to lasting profits. His concern? Too many companies chasing the same escalator, leading to crowded trades and no real competitive advantage. Burry singled out Nvidia and Palantir, calling them two of the luckiest companies right now, but predicting a harsh reckoning if revenue lags massive capital spending. As of Thursday's close, Nvidia shares clawed back to $562, up around 1.7%, while Palantir ticked up to $18.70 despite sharp debates over valuation. Shifting gears to mutual funds, 5 of the biggest domestic fund managers, HDFC, SBI, Kotak, Axis, and ICICI Prudential, completely exited 7 mid-cap names in December. These exits include stocks like Torrent Power, Adifir Birla Capital, Oil India, Biocon, Indus Towers, NMDC, and ZF Commercial. For investors, these moves signal shifting confidence among institutional players, especially with mid-cap valuations running high through the end of the year. In stock-specific highlights, dividend plays are catching attention. 3 major names, Noble Corporation, Booz Allen Hamilton, and UPS, have been beaten down but may be set for a rebound. Noble, a top offshore driller, boasts a 6% dividend yield and a $7 billion backlog, even as shares remain far off their $53 highs. UPS, the shipping giant, has climbed back above $108 after a painful post-pandemic drop. Long-term investors may see opportunity as rates edge lower and these companies rework their balance sheets. Tech still steals the show. Despite warnings of commoditization, AI chip makers and data analytics firms remain in the spotlight. If Burry's thesis is right, investors should watch for increased volatility as capital spending booms turn to scrutiny over actual revenue. And finally, keep an eye on market breadth. Recent index gains are masking underperformance in midcaps and some value sectors, hinting at possible rotation ahead. Quick recap. S&P 500 up 0.5%, Dow Jones down 1/3, Nasdaq up more than 0.5%. The key theme: caution around capital-intensive AI bets and rotating sector leadership as the new year unfolds. Looking ahead, get ready for earnings calls from the financial sector next week and the latest CPI inflation data. Both could bring more volatility. Don't forget to subscribe and stay informed with us for your daily pulse on the market. Thanks for tuning in.